And good morning once again to Bloomberg Opinions Editorial Board Conversations. And I'm Robert George, your host. And once again, it's my pleasure to welcome back Mark Whitehouse, who was my first guest here
Greetings.
just several weeks ago. Last time we did it, we had a nice conversation over cryptocurrency, and Bitcoin promptly crashed. So goodness knows what's going to happen after today's conversation. Mark, welcome back.
Thank you.
Over the last year plus, basically since the death of George Floyd, there's been this ongoing racial conversation, and it kind of came to another peak in the past month with reflections on the 100-year anniversary of the Tulsa race massacre, and also Juneteenth, which is now officially a federal holiday. One of the questions that's going on right now is how do we face the so-called racial wealth inequality? And one conversation once again goes to the issue of home ownership. So Mark, you want to give a little kind of history of what the federal government has tried to do in the context of home ownership among African Americans, and what are some of the newer innovations on the horizon?
I mean, it's an astonishing and horrible fact that more than 150 years after the end of slavery, the color of a person's skin still is such a strong predictor of so many other things, including their wealth, including where they live, and the value of their home. And this is a direct result of federal policy throughout the 20th century, and so it's up to the government to fix it. And the history bears repeating because a lot of people still don't know it. I would recommend a book called The Color of Law that Richard Rothstein recently put out. It documents and details a lot of this history. It goes a long way toward explaining the highly segregated and inequitable America that we know today. So I think some people understand is that government subsidized mortgages all but created the American middle class. They allowed people to buy homes with low monthly payments, to build equity, and ultimately to pass that wealth on onto their children in the form of their down payments on their homes, and so on and so forth. But the Federal Housing Administration almost completely locked Black Americans out of this. There's redlining with which people are more or less familiar, in which the FHA had these maps that designated certain neighborhoods, predominantly Black neighborhoods, as unfit for lending. But what's often missed is the extent to which this affected all the new development that defined America's residential landscape today, all the new subdivisions that were being built in the 40s and 50s and so on. The potential presence of a single Black family was enough for the FHA to deny financing to an entire new subdivision. So developers would go to great lengths to ensure that there would be no Black people anywhere near their developments. There's one example. There's a wall. It's still there in Detroit. One developer in Detroit went so far as to build this wall. It's a half-mile long, concrete, 6 feet high, a foot thick, to keep people from an existing Black community out so that he could secure FHA financing. The neighborhoods have changed, but the wall is still there. And so you had these well-financed white communities on one side of the wall, and this wall that existed throughout the country, essentially, and extremely poorly financed Black communities, which over generations contributed to all the disparities in health, education, crime, and of course wealth that we see today. It's concentrated and entrenched disadvantage. And to make things even worse, this made Black communities vulnerable to all manner of predation. Since they couldn't get loans, speculators would buy houses and sell them these houses on so-called, for example, in the 50s to the 70s, land contracts, in which the buyer, it was similar to mortgage in that you made monthly payments, but beyond that, the similarities disappeared. The terms conferred all the responsibilities of ownership without the rights. So the buyer had to pay for upkeep, but didn't get title, and could be evicted for missing a single payment. So it was very difficult to build equity. Then there was the FHA scandal of the late 60s and early 70s, in which the FHA turned around and wanted to lend more into disadvantaged communities, but the lending was indiscriminate. There was a lot of corruption. And so this actually allowed speculators to sell homes at inflated prices to Black families. And of course, they couldn't break into the white communities that had already been developed. So these were, in places that didn't have adequate infrastructure and things like that, saddling them with almost often impossible payments. And then the most recent example is the subprime boom of the 2000s, in which Black borrowers were still steered into loans with outsized interest rates, no money down, other toxic features that all but guaranteed default, and actually frequently extracted what equity people had managed to build.
So basically, you had well, maybe not completely, but you had a large issue in terms of de facto discrimination in terms of home ownership that was created by the federal government, and then the federal government comes in and says, "Oh well, we screwed up, so we now want to quote fix it." But in fixing it, they doubly made it worse. And you said leading into the subcrime. Pardon my Freudian slip there. Freudian slip.
I think you just coined a term there.
I know. Well, yeah, thank you. But the subprime scandal, which helped lead into the crash, and so coming out of 2008, 2009, Black homeowners were arguably in an even worse situation than they were in the years prior to that. So it seems then that the credit approach or the credit solution that the federal government came up with first in the 60s and then into the 90s failed, and in certain cases failed spectacularly. So what's the new option that's on the horizon, that's under discussion?
Well, I mean, I'd like to step back a little bit, because you can see this in the data. You can see it in median Black family net worth, which is about an eighth that of the median white family, and hasn't changed over the past 3 decades, really. I mean, hasn't sustainably narrowed over the past 3 decades. Same with average home equity. The average home equity for a white family in the household in the United States is around 170,000, whereas for the average Black family, it's probably about 60-something thousand. So it's about a third. And the value of homes in predominantly Black communities hasn't risen the way it has in white communities. And also interesting to note that important to note that the subprime lending boom wasn't a purely market phenomenon, right? This was aided and abetted by politicians, subsequent by administrations on both sides of the political spectrum, from both parties. But what you're saying is that the federal government tried to solve this by just providing credit one way or another, and that doesn't help if people don't have the ability to pay. If they still face all these disparities in wages, healthcare, education, and so on, and if the only face of finance in their neighborhood is payday lenders, check cashers, and other businesses that extract money rather than helping to build wealth. So you were saying there's a new approach. You were mentioning that. I mean, it's important to note before we talk about any specific policy here that this has to be done as part of a comprehensive effort. You have to address all these disparities. You're not going to build wealth if people are disproportionately incarcerated, or if they don't have the same access to education, or if they're dealing with health issues. So you have to address all those disparities. You need to break down barriers. For example, get rid of zoning rules designed to keep people out of desirable neighborhoods that prevent the building of affordable housing. You need to offer people safe and expensive bank accounts. You need to remove bias from credit scoring models. There's a whole litany of things that you need to do. But yes, in terms of housing wealth creation, One promising approach is to give people some equity, start them with some equity, otherwise known as down payment assistance.
And how does that work? How is that different from the credit model?
Mm-hmm. Well, you're actually giving one of the greatest obstacles to home ownership is just saving for a down payment. People with generational wealth can often tap their parents. For others, that saving can be very difficult. So a poll was recently done, and this was one of the major things that people mentioned as obstacles to them becoming homeowners. So just providing a certain amount of equity for people to begin with. Biden, in his during the campaign, proposed 15,000, as much as 15,000 for first-time home buyers. Maxine Waters and other legislators have proposed 25,000. Most state-level housing finance agencies already offer some level of down payment assistance. Some big banks are doing it too, but all the varying rules and features are hard to navigate. And so the federal government could play a useful role by adding resources and also by harmonizing all these rules so that it becomes easier to use.
What would the eligibility requirements be in a proposal like that?
Right. So
what's under discussion, I guess I should say, since it's
there are different ways to define this. Probably or one way to do it is to just look at people who are renters and whose parents were renters. So they're first generation home buyers. The Urban Institute has estimated that there may be roughly 5 million households would qualify if this is the way you defined it. At 15,000, as Biden proposed, this would cost less than $100 billion spread over several years, which is a lot less than the cost of the mortgage interest deduction, which does very little to promote home ownership and goes primarily to people in the tax brackets high enough to take advantage. So it's regressive.
And are these considered loans or grants? Obviously, we got into an issue during the previous crisis of people not being able to pay back. How do they get around this time?
Well, essentially, it's like a forgivable loan. So if you stay in the house for a certain number of years, some would say 5 years, some would say 10 years, then you don't have to pay it back. If you try to flip the house or something like that, then you have to give the government back its money.
So it's not unlike the PPE loans during the pandemic, right? They basically become forgivable if you make some easily achievable goals.
Right. As long as you do what you promised you would do. For example, in the case of PPP loans, it's keeping people employed. In the case of this, it's staying in your house and building equity. Now, certainly, more research needs to be done on the best way to design DPA, down payment assistance. But one rather large study of a nationwide DPA program was done and found that all else equal, people who received assistance were no more likely to default than people who used their own savings, which means that this actually creates homeowners on a permanent basis, suggested in any case.
I guess one last thing before we finish up, and this is kind of the more sensitive aspect of when you're dealing with sort of intractable social problems. There's a debate. There's a longstanding debate with these programs. Do you target them against a specific minority group? I mean, we've been candidly talking about Black homeownership, or do you target it towards a specific class? just say, poor in general, which may get might get more African Americans, might get more Latinos, but also, there's also a significant, white class, which also has ownership issues. How would programs designed, for want of a better phrase, to be race neutral? Are they class focused?
I mean, again, it depends how you do it. I think there is a strong argument for targeting Black households because of the unique experience they've had throughout in the past couple centuries or more. That said, the urban, when we're talking about those 5 billion households that the Urban Institute estimated, the ones that are renters and whose parents were renters, they're disproportionately Black, but they also include millions of white and Hispanic households, for example.
So in other words, another way of saying this is, to target the history of inequity going back generations. They are, in a sense, looking at those who literally need it for generations. You go back, as you said, renters and those whose parents were renters as well. So historically, we've had people who are in the middle class have often benefited from a transfer of generational wealth, and now this is kind of targeting that from the other side.
Right.
Well, that's great. That's kind of a perfect place to stop. Mark, thank you for once again being thank you for coming back here again. Much appreciated. And
to be of service. Pleasure as always.
Thank you all once again.